Well, I'm going to cover the FTSE today, and there will be sort of some data points that will be of interest. But yeah, I think we need to have a look at the charts because, as you say, it's been very much reflected in the price action of the FTSE 100. And there is some data points as well that we're going to sort of utilize to see what might happen next. But it doesn't look good, and ultimately the market will go up. You know, it's just war's a strange thing, and it does actually tend to be pretty good for indices eventually. But you know, while we've got these uncertainties kind of going on, there is just continuous days of down, down, down. Now this was last week's bar. You know, this is more representative of a 15-minute chart. But this is last week's bar, a huge move to the downside. The very, very high to the very, very low was 500 pips. Now we're talking nearly 10%, a near 10% drop in the index from last week, which is huge. And there were some days that were up, but the last 2 days, Thursday and Friday, both motoring to the downside. Very little in the way of the external, the upper forces that could actually drive the market higher again, i.e. the Fed, really, and some of the data points from the Fed as well. But let me show you what we might be looking at next week. Let me do this, because the way that I'm currently playing the FTSE is making sure that let me see if I can do it like that one. Yeah, that's right. Making sure that that we can take advantage of just some things that might just give us some relief, because the market's gravity, or the draw, really is to the upside. You know, that tends to be sort of like the overall kind of view of the market. But typically it goes up a staircase and it comes down a lift, and it's done exactly the same thing, or it jumps out the window, whichever way you want to say it. It's done exactly the same thing, where the last 2 days it really did just jump off the cliff. And you know, actually we talked about a near 10% move over a week. It was a near 10% move over 2 days to the downside. Now there are so many things kind of entwined in the FTSE. We have to consider the biggest companies: oil and gas, mining stocks, and financials. Now we have to, because we're looking at oil and gas, we've got to have a look at WTI. Now, because WTI is continuing to move to the upside, it's enabled Shell, the likes of Shell and BP, to do quite well. But this move here is a very, very dangerous kind of move. You know, it's parabolic. It hasn't, in the same way that you expect markets when they come down to jump out the window. This has just got in a rocket ship and it's just launched off, which suggests when it comes down, it's going to come down hard. Now that will affect the FTSE further. You know, so the one thing that has been able to make the drop not quite as bad will probably make the drop you know, a whole bunch worse. You know, eventually it's going to make the drop a whole bunch worse, which means the FTSE, now I've drawn out some levels here. We're at this current horizontal line, and this should see a bounce. You know, we should get some sort of bounce here. This is a monthly chart, so it's not even a daily or a weekly. This is a primary chart time frame we're looking at here. And we are at a bounce point. When this breaks, which I'm pretty sure it will, but you know, I'm pretty sure, I can't be 100% sure, but I'm pretty sure it will eventually break. When this breaks, this is the next level down, which is another, it looks like about another 5% drop. So another 5% drop down in the FTSE, you know, would be the point that I'd be a little bit more comfortable just saying, okay, maybe we can start actually buying some longs and holding on to those longs. But right now, the way that I'm approaching this market is to any longs that might transpire will be taken quickly, and they'll be in and they'll be out, because really what we're looking for is those retracements to be sold off. And you can see, look, there's gaps here. This on the daily chart here. There's gaps here. Can it get back up to that point? Well, that point currently is going to equate to you know, around about an 8% gain, and an 8% gain in a market which is so scared is unlikely. So things need to calm down substantially for that to happen. It will get there eventually. Could take a month, could take a few years. We don't know, but it doesn't seem like this particular phase that we're going through is likely to change it. Russia continued to add pressure, and with that particular pressure, that's going to continue to drive the stock market lower. But what could give us a little bit of relief? I don't see too much until the end of next week. Look at the data points this week. Quiet. Nothing really in the first day that could drive the FTSE too much higher. That could mean that we go sideways. Initially, if people are starting to say this particular price is now the conflict is now baked into the particular price, so we could see it go a little bit sideways on day one and day two. Governor Lowe speaking might just shift the market around a little bit, but the FTSE's actually closed then anyway, so that won't be a huge one. But this is where it starts getting interesting. Thursday, monetary policy statement from the ECB, and Friday, consumer sentiment preliminary consumer sentiment from the United States. That may well see just the FTSE just get a little bit of relief as we at least go into those particularly the statement and then the release of the data. So if the FTSE's low, my idea really would be on Thursday to look to see if there's a buying opportunity before that particular data point. So maybe Friday when the market opens, maybe more like 11 o'clock, because that 11 o'clock UK time, because that data release is going to be around about 12:45. But otherwise, up until that point, then the sideways, the potential sideways movement will suggest that we would be safer selling anything that looks like resistance. Getting involved to the downside and expecting the market to tank again would be dangerous, because as I said before, we're at primary support, but it would be safer to sell any potential resistance points. And I'll just finish up with the seasonal pattern on the FTSE, which does not paint a pretty picture. This is March here, and look what happens to what tends to happen in March, right the way through until the end of March, and that would coincide potentially with the Fed and their rate decision on the 16th. So, a few things to consider. To summarize, I'm looking for shorts if we get into a range, trying to sell the top of the range. On Thursday, I'll be looking to see if I can buy into the statement, and potentially the same on Friday when we potentially buying into the release of consumer sentiment.
Eyes and ears still open to what happens in Ukraine, mate, of course.
Yeah, exactly, mate. And because if that takes another turn for the worse, I mean, it seems to me the main source now of contention is going to be whether whether Russia can take Kiev, and if they were to take the city, then the market might find that really, really tough, because that might indicate what's Putin's next move after he's got Ukraine. Where's he going to go next? Is he going to try and consolidate the USSR, which seems to be, what a lot of people are suggesting, or will it be what he initially said, which is to kind of suppress the rebels, and just sort of take control of some of those rebellions. I mean, obviously we all doubt that that's his real overall the thing that he's really trying to achieve. That's not the overall end game is probably trying to get the USSR back and trying to glue back the region together. So that I'll be looking out for that, mate. But if it's kind of more conflict and more kind of like stories of there's fighting going on, I think we might go into a bit of a range just because we've dropped so far.
Yep, makes sense. I noticed the S&P's kind of stabilised a little bit in that regard as well, hasn't? Done what you've seen on the interesting.
And I suppose that's a really good point. And I think that whenever I'm trading a FTSE, I want to look at WTI, what's happening. I want to look at the S&P, what's happening, because that gives me an overall view of the global sentiment. The FTSE's just given me the FTSE sentiment, but what's global sentiment? S&P, NASDAQ, Dow give me that, and obviously gold. We want to see what's happened with gold as well. Gold is Ainsley will talk about gold, so I won't go into that. But I do want to open up a gold chart when I start, just to see again what's the sentiment of the day. If gold is rallying hard, that would suggest FTSE short. If gold's stationary, that would suggest we might actually get a little bit of a relief rally in the FTSE.